Well, welcome back from the break, and now we take a look at what's happening in the business scene this evening. Now, despite having lower debt than some other African countries, Uganda's debt in 2020 crept past the 50% debt to GDP ratio mark. Now, foreseeing economic crises in the near future, civil society is urging government to implement various defensive strategies to curb the peaking debt. Now, this was at the African Conference on Debt and Development held at Hotel Africana in Kampala.
The African Conference on Debt, hosted by Uganda Debt Network, brought together political, technical and civic leaders from Africa to deliberate and agree commitments that safeguard the macroeconomic sustainability of the continent.
The cost of PPPs, the contingent liabilities that come with it, should be understood further if we are going to discuss debt, because they are guarantees government make for such projects and they come at a cost. There is a new animal taking place in our region of Albertine. The production sharing agreement, yes, it's a semblance of a direct foreign investment, but it is a recoverable cost.
Experts noted that Uganda has to check its borrowing appetite while refining domestic value, since the economy greatly hinges on the success of its neighbors with whom it transacts with.
We don't know where the politics of Kenya is headed. That is our first biggest trading partner where we export. We also have, besides the gold that goes to UAE and maybe human beings, Kenya is our big trading partner. The other second trading partner is the South Sudan. As you have all noticed, trucks can no longer go there. So what does that mean to an investor? What does that mean to somebody who lent Uganda to build roads on the assumption that we are going to boost our production and export to the region?
In spite of the risky debt position, Uganda took on a credible medium-term program early this year, supported by the International Monetary Fund, in a bid to put downward pressure on debt. The program lies on three pillars, which are growth-friendly fiscal consolidation, high-quality spending, and strong governance.
The IMF has made available additional resources to boost liquidity of its members, the most recent of which is the global SDR allocation of 650 billion that was made available on August 23. It is important that these resources are used to boost international reserves and, where prudent and necessary, for budget support within the country's legal framework in respect of medium-term development plans and with utmost transparency.
As of December 2020, Uganda's total public debt hit a record of 65.82 trillion shillings, up from 49 trillion in 2019, with a 16.82 trillion increment due to increased government borrowing. Wadulo Makanold, UBC News in Kampala.